Hello, everyone, and welcome back to the Trader's Mind Chat live show. Very special live stream today. We're talking about support and resistance basics. I think that it's a great time to be talking about support and resistance and for you guys to learn the basics because right now the market kind of sucks to say the least. Like, it's not a great environment to be actively trading that. This is actually the first time in a very meaningful period of time, like more than a year, I would say, that I've been completely out of the market. I'm talking about not just my swing trading account, but also for my long-term account. I just sold Apple and Tesla today, intended for them to be long-term holds. Didn't happen. Sold them after about 6 and 8 months on those. And yeah, crypto account is also in cash from maybe about a month now. And yeah, time to avoid the chop, and learning more about support and resistance will help you with that tremendously. So yeah, if you're brand new to trading and you want to learn about support and resistance, you're going to love this. If you're here for a refresher, then yeah, it's also for you. But before we dive into the presentation, know that number one, you could ask questions throughout. I'm monitoring that chat, so please put your comments in. Let me know what questions that you have, and I will answer them on the fly as we go along. We're also going to do an open Q&A at the end of this. Also, hit the like button, hit the subscribe. Let me know where you are watching this from, and let's dive into this. All right, so today, talking all about support and resistance, and the more of these that you can stack up, the stronger your levels of support and resistance are going to be. So today we are going to talk about price structure. We're going to talk about trend lines, talk about multi-time frame analysis, if you remember that from last week, moving averages, and psychological levels. Talking about all that today. Now, if you remember last week we spoke all about trends and multi-time frame analysis. Here is a slide to help you out a little bit more with that. So one of the things that we spoke about last week was how we were looking at trends, and you saw sideways trends, you saw uptrends, and we spoke about how to determine those things. Spoke about downtrends, all these trends. Well, guess what? Guess what? Well, with all of this, you have the picture of price structure, support, resistance, trend lines, all that stuff is right there. So let's take a look at some of it. Ah, and there it is. Right, so those transitions showed up a little bit out of order, but you get the idea here. So we're looking at support and resistance in this sideways move from left to right over there. You could see how that structure, that trend, that sideways trend built a level of resistance, right? So price was moving up, hit its head, moved back down, hit its head again, and then finally broke through. When it came down here, right? It developed a level of support. So price came down, ran up, found its floor in that general area, and then continued higher. And then when price broke out and it formed this uptrend, it made a little channel, right? Like a price was moving pretty constructively in that channel. We'll talk about each one of these in a little bit more detail as we go. But then over here, again, price starts moving sideways, right? So that's the ceiling, that's the floor, comes up and then crashes through the floor and rounds out another level of support and resistance, and then heads higher. Now, one of the things with uh, support and resistance too, and actually, let me show you this too, right? Because support and resistance, all this stuff, like it's pretty simple, right? Pretty simple, pretty straightforward. Like none of it is rocket science. Well, what we're talking about here, just basically looking at price structure and understanding that price has memory, and where because of that, we're able to uh, fairly accurately assess reward to risk, right? Like we're not in the business of making predictions, but we are in the business of assessing trends and assessing reward to risk. And the we also know that what uh, once an object is in motion, it tends to stay in motion until acted upon by an outside force, right? Like physics 101. Same thing happens in the markets. And that's one of the reasons why doing this is pretty simple, pretty straightforward. Where if you're new and you're watching this, I haven't watched the news in relation to trading stocks in more than a decade, right? And that includes uh, like papers out like IBD, and I'm a fan of everything that they do, and that's how I got my start. But like, I'm not relying on some analyst or anybody else to tell me what the market is doing, because so much is visible to us right there on the chart. Listening to what, or rather, watching what people are doing versus listening to somebody else's interpretation of what they're saying. Great way to operate. Now, uh, support and resistance and price trends, it's all created by price action. Every last bit of it. That's one of the reasons why price action and understanding price action is so important. And so is volume too. As I mentioned a moment ago, price has memory. When price tests prior structure and rebounds on or around it, because it's the way that price behaves, it's more of a range. Like it's not an exact figure, it's a range. And if you treat it as a range, you'll be much better off. But there's ways to identify those more specific points and to understand if your support and resistance are strong, like concrete, or if they are paper thin, or like they're kind of like wet cardboard. We'll talk about how to determine which is which. And trend lines. Trend lines are a little bit different than than price structure, support and resistance. The difference is that with a trend line, you need at least three touches on the trend line. So, in order for the trend line to be valid, and it's for that reason that I consider trend lines to be secondary in nature. Um, for that reason, and also because you kind of need to look in the rear view mirror a bit to identify trend lines in order for them to be uh, appropriate or valid. Strong. So let's take a look at those charts again. All right. So here it is. We have our uh, lines of support, and support down here, resistance up here. Prices seemingly bouncing off the lower level and finding resistance at the higher level. Both of them finish within their ranges, and then they start to tighten up in the price action, right? Like, oh, you could see over here too. You could see how uh, there's a little bit of a character change, right? Uh, like over here, the price bars are significantly wider than they are as we start to move over to the right. You can see like how it starts to get progressively tighter as we move from left to right. If you are trading and you're looking for a bullish setup where you would buy something and get long, that's the type of action that you would want to see. It's very different than what the market right now is doing. Like it started to move sideways, but it actually got wider as price went. That's one of the reasons why so much has been rolling over recently. But back to this, you could see like how price started to break out over here, right? Price breaks out and then it forms that little channel. Now, in order to have a valid channel and valid trend lines, again, you need to have a minimum three touches on that trend line. So basically, from where it starts, and then you have one there and another one there. So you have three right there, and you could kind of see a little bit beforehand, like, oh, maybe it's forming a channel, but it's not truly a channel. It's not truly trend lines that are working that you could rely on, unless if you have those three touches. Same deal for the lower trend line, right? Like you have one starting down here, two, three up there, right? And so that this is part of the reason why too. If you're looking at trend lines, it's good. I find them to be best when I'm already in a trade, right? Like there's something that I want to be aware of when I'm in a trade and I'm trying to manage a trade. Now, this is for some of you folks too that are here for the refresher. If you're new, let me know and type your questions in and let me know that you're following along with this. But uh, the idea is like if you bought back here and you're following this trend and you're riding it and you're riding it up and you start to see, oh wow, there's this channel forming over here. I have three touches of this upper trend line, I have three touches of this lower trend line. That tells you that if price were to say break out above this channel line, kind of like what Apple just did, right? So just to give you an example, real-time example uh, from right now, right? So here's Apple, weekly chart of Apple. There's actually three trend lines altogether, but there's an upper trend line over here, that dotted line. Then there's this red upward sloping trend line, and then there's this lower trend line down here. On the upper one, you can see like how it started to break above it 2 weeks ago, 3 weeks ago, and then it also had this shorter accelerated trend line, right? It broke above it last week, and it started to pull back this week. Actually, sold my Apple today, like right as it's pulling back. I was trying to sell it yesterday, didn't get uh, to the charts in time. It didn't get to the broker in time, so I sold it today. And yeah, this was a trade that was intended to be a long-term hold, meaning that I wanted to hold it for a year. Um, I've only held, I believe, one trade for over a year. I believe it was Apple several years ago, but was trying to do it again this year. Wasn't able to do it. I started this position in April, just sold it. Risk management is rule number one, right? Lock in those gains when you're getting major sell signals, adhere to what the market is telling you. So, anyway, real-time example of these trend lines and how they can work. And then you get a little bit more support and resistance in this area. You break down, and that starts the bearish trend, right? So before we had a breakout above resistance, that is starting a bullish trend. You get a breakdown from support, it's starting a bearish trend. And you notice too how there's always this transition, right? Like you're not just going from uptrend straight into downtrend. There's this sideways movement, then an uptrend, then a sideways movement, then a downtrend. Now it could be very quick, right? Like you were in this downtrend, then you move sideways, and then you started an uptrend right away. And that's where you could start to see quite a bit of choppiness too, when you are flip-flopping between trends very quickly. It's one of the reasons why I like to track and uh, and track these trends every single day. Like you probably, if you've been on any of my streams, you've seen this spreadsheet. Let me zoom in just a tad here, where I'm tracking, well, what way is the trend moving, up, down, or sideways, and I do that every day, and I do that across all these time frames. It helps me visualize uh, where are we at. Do we have a nice smooth trend, or do we chop it around back and forth rapidly, like something like this? Like right in here, this is a point, and also like in there, like that's a point too, where if you are keep on moving back and forth between uptrend, downtrend, sideways, like it tends to frustrate both sides of the trade because there's reasons to be bullish, there's reasons to be bearish, and neither side is making a ton of progress. Like if you remember that image that from a few live streams back, where we were showing that tug of war, right? Like that's basically what you have there. So lots of ways to think about this stuff, but for right now, focus on support and resistance, channels, and the price structure that you see here. It's really, really helpful stuff, and it's not that complex at all. Like so far, yeah, it looks like all of you understand. So just like the moving averages, support and resistance and trend lines are they're all important characters in the story that the market is telling us. And like just like there's all these different regions, like we have all the different regions of the market, right? And they're all affecting one another. And we have the different seasons, right? And all the seasons, you can see the different types of change from largest to smallest. The same exact thing applies with price structure, with trend lines, and with those moving averages. Yeah, you could even see it like back here, right? Like this is a monthly chart. You could see how this stuff develops on a monthly time frame. Like that, this is going back to 2015. You could see like how choppy that period was. Zoom back far enough, and everything is an uptrend, right? Well, if you are trading, and even if you are a long-term investor, and you're experiencing that kind of whipsaw like that, that's not fun to sit through. Sure, you had tradable rallies in this period too, but it's knowing the type of environment that you're in. It's zooming out, seeing what the bigger picture looks like from a monthly perspective. And that's how you could tell too, right? Like so uh de- depending on what part of the world you live in, you might experience all four seasons, right? You have winter, spring, summer, and fall. Well, in the stock market, it's not always the same length of time for each of the seasons. You might be moving sideways, and you might be in a winter for a year and change. It's possible, right? But the way to know what season you're in is by looking at this kind of stuff, right? Like not relying on what somebody tweeted, or well, what's being said on the news. Like watch what people are actually doing. If there's a Fed announcement, right, or some other big event, know that the event is there. Know that the event might create some kind of a short-term move one way or the other way, but the actual decisions, the things that matter for price, are to look and see like, well, what is actually happening. All of that is right here. The price structure, the trend lines, the moving averages, all that stuff works together. So right now, it's your turn. It's your challenge. Your next steps, right? If you want to take all this stuff to the next level, then go ahead, pull up charts on the S&P 500, NASDAQ, Russell, Dow, all that stuff. Start with monthly, draw your trend lines, draw resistance lines, look at the price action, look for like some of the other stuff that we spoke in other live streams, the moving averages, the major round numbers where you might start to find support and resistance. Repeat this exercise on weekly time frames and comment down below and let us know what kind of stuff you find. Now, uh, going to hop over and do our open Q&A. Any kind of questions that you guys have, anything at all trading related, let me know. Put it into the chat, and we will do some open Q&A. Do some open Q&A. While we're waiting for one of you out there, one of you brave souls to break the ice, let me share my screen again over here, and I'll actually walk you through the recent sale in Tesla. So in Tesla, I got long down here in June. Saw bottoming out. It had that red line crossing or getting very close to that gray line. That's the 10-week. That's the 40-week. Those two are converging. I'm bullish on Tesla. I love the theme. I did not think that it would completely roll over, and so that's part of what trading is, right? Like you have an idea, you want to test it out, you put money at risk, and you are willing to be wrong. So if price completely rolled over and I would have been stopped out somewhere like down here, great, then that's it. My idea was wrong. But the thing with trading is that if your idea is right, you want to be right huge and win big when you're right, but lose just a little bit when you're wrong. And unlike casinos, the odds are in our favor. We get to make the rules. We get to make any kind of rules that we want and only play when the odds are in our favor. So you can't ask for much better than that with trading. So got in down here back in June, rode this up. And as this is accelerating, I'm telling myself, man, like this is going to be really, really hard to hold for a long-term capital gain. Like I wanted to hold this for a long-term capital gain. Um, when price starts getting really ahead of itself, I struggle with sitting through major pullbacks. In fact, I'm kind of surprised that I was able to sit through this consolidation for as long as I did. Like from the top to where price pulled back to, that's a 25% consolidation for me. Like for me, that's a lot. Generally, for my swing trading, I'm not holding through a 25% consolidation. If I'm giving back 10%, it tends to be a lot. So sitting through that, and the thing that got me out of this particular trade was uh, a rule that a friend of mine, um, a former IB New York City Investors Business Daily meetup presenter, this guy Ajay Jani. Now he's off running his own hedge fund, but the rule that he came up with was that if price, like if you're long in a trade and price closes below the 10-week line, to sell if it drops below the week of that low right there. So when that happened last week, we have our new line in the sand, that being right here. And Tesla continued its downtrend. So decided to lock in those gains, follow the rule, follow your risk management first, right? And lock in those gains. Okay. Any questions? Trying to go for a half an hour here, but I don't see any questions coming in. Let's take a look at crypto. Any of you trade crypto? Let me know if you trade crypto. Type that into the chat. Yes or no? Do you trade crypto? Got a bunch of people watching over on ShareVision too. It looks like there's a bunch of people over there. type into the chat over on ShareVision and let me know if you are watching this or not. If you are trading crypto. Let's take a look at some crypto. Yeah, your strongest one was Ethereum. Strongest one was Ethereum, and Ethereum began to roll over. Right? It started to really, it was holding its own, and then it broke on this day here. I was still long Ethereum. I had wrote it up from down here, right? Rode that whole trend, exited somewhere in this neighborhood. Well, when it started to break down, yeah, I was out on when it broke again. Talking about channels, right? Let's redraw the channels. Yeah, it's not a perfect one. You have a violation right there, but you can see how it's pretty picture perfect otherwise, how it was trading between those two levels of support and resistance all the way up, and then it broke that, right? So when price trend changes, we need to respect that. So on that day, I'm exiting. Then price started to rally, it started to come back around. So I'm getting long. I believe I got long right there on that day. Held through that, and then this happened, and was fortunate enough for this to happen in the middle of the night before I woke up. When I woke up, price had already rallied back, and so I decided to exit there. And the reason why I didn't want to sit around and wait for a rebound like that's very erratic action. That is not bullish action. So I would rather buy off of a lower consolidation, right? Like so let's say I was able to nab that right there. Okay, but am I buying into an uptrend or am I buying into the beginning of a downtrend if I'm buying here or if I'm not selling there? It's beginning a short-term downtrend, right? You have a series of lower highs. There's your high, there's another high. Now it's made a third lower high, and it's making a series of lower lows. Lower low, lower low, lower low. So all of those are things that are factoring into the decision making of, yeah, get out of Dodge, uh, wait on crypto to stabilize, right? And it would be one thing if all the other cryptos were doing well, but you have Bitcoin at the same time breaking down, like trading well below its 50. At that time, Ethereum was really the only one holding on. And similar, just like how we were talking a moment ago about your major indices, right? How looking at this, let me get that slide back up toward the end here, where each one, right, like that, you have all the major indices, they're all affecting one another, and you have all the different seasons. Same thing applies in crypto, right? If all of the coins, if all the major coins, you have your Ethereum, your Litecoin, your Bitcoin, all of them like rolling over, it's just a matter of time until the others go as well. All the altcoins, right? Today, for example, is have a little bit of a rally in Doge. I think somebody said that Elon came out and said something about Doge, that he was starting to accept Doge for some kind of products over at Tesla. Great. That's not a rally to buy. It sure creates a short-term pop, but yeah, like respect price. If you took the ticker off and you're just looking at this chart, like, well, what kind of decision are you going to make? It's a bearish chart. It's all over the place. It's not really something to buy, not right now. So it's time to wait. Anyhow, yeah, I saw somebody else just hop on. Welcome. I'll give you a moment to pop in a question into the chat. Chat's been pretty quiet today, but otherwise, we'll wrap things up. All right, everybody. I think that is going to be pretty much it. I'll talk pretty slow to give that last person the opportunity to get their question in. Yeah, it's been a few seconds. I don't think that's happening, but for all of you that are watching, I appreciate your time. I appreciate you guys being here. If you want to go deeper on any of this stuff, we have a full library in our elite program. You get to work with me, live group coaching, 4 hours every single week, 1 on Wednesday, 3 on Saturdays, pro tools, access to that spreadsheet. You could use it as a trading journal. Many of our members do. It's fantastic. Go check out the Mara Elite program over on marawealth.com. And I will see you all back here tomorrow. What are we talking about tomorrow? Tomorrow, I believe we are talking about surviving choppy markets. Very appropriate topic. All right, everybody. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.